Okay, hi everyone. I'll be starting this market debrief meeting. Okay, the market sentiment right now is that we are slightly bullish. Okay, a bit drop from previously. There was a very bullish. Okay, this is due to US, having right now an extended run. So US has been running for quite some time, almost 2 months really, and then it's about to hit over to this S&P 500 all-time high price. Okay, so right now they are in the extended run, and therefore the bullishness has kind of dropped. People are starting to feel that is this run sustainable or not? Okay, because many analysts, many economists are basically saying that the whole fundamentals is not supporting this whole extended rally for this stock market. So there's some profit taking start to happen last night really. Okay, and we can see last night Dow Jones was down 300 points. Currently, the DAX German market is open really and it's already opening down. Okay, so we can see here is that there might be some profit taking in the near term. Okay, so what are basically driving this sentiment on the upside is that the rationale is probably we know that we are going to have a confirmed recession coming July. The whole global economy is going to uh, state that we are in a recession, or they are confirmed that we are in a recession in July. So come the next quarter, the following quarter, which is our third quarter, right? Due to the opening of the global economy, they might be thinking that this recession is only just for one quarter, and that the whole GDP will start to bounce back, and there will start to be some growth, and therefore the stock market is going to rally, and this is just a blip, in the whole stock market history. All right, so right now the world we have right is in a pandemic situation. Some of the countries are coming out of it, but um, in my own opinion, back in the early May and in April, I've mentioned to some of y'all that in my mind, I'll always be having this situation whereby we might be facing a second down wave. All right, what meaning a second down wave? Meaning to say once all the buyers that wanted to buy right had already bought into this rally, and there are no more buyers, and when sellers starts to come in and start to realize that um, this whole rally is unsustainable. The picture is haywire. Unemployment rate are up. People have jobless, and when such news comes in, bankruptcies of companies, big companies, um, and therefore it might be a trigger for a second down wave. Okay, so at this moment of time, there isn't any signs or signals that tells me this second down wave will not happen. All right. So the question right now is we are asking is when will this happen? Um, my rough gauge is probably after August or probably end of the year. Why? Because if we look at our most of our stimulus plan is running mainly to August, September. Most of our mortgage loan that we see in our local news is that they have been delayed to like end of the year. Okay, and recently we have news stating that Singapore may reach unemployment in 2020 right, with about 4 to 5%, of our unemployment rate. Okay, so there are all these factors that comes in, and we start to be thinking, is this really sustainable, and are we going to face a second down wave? All right, so this is something that I have to put up into this video and make sure that we are aware and not be like too bullish, because the banks are running, the stock market is running, for the past 2 weeks, and it's like, have we missed the boat? The kind, I don't invest enough. This sort of question that comes in. So we just have to be mindful what is really happening in our economy at the moment. And most of the developed countries, right, US, France, United States, even Singapore, we are all predicting about a 4 to 8% contraction for the year. All right. So this is the S&P 500 index, okay, and I already mentioned that we're now having an extended rally, and most likely we might be looking into some selling or profit taking, somewhere in this area as it tests the all-time high price. Okay. This is the Straits Time Index, and currently at this moment it's been trading in a range. Okay, so this is the past 2 weeks rally that we have been facing, and we are anxious now that have we missed the boat or not? Okay, so as of this moment, this is roughly like a base formation, and what it looks to me is this is still like a counter trend rally, and we are still trading below the 200-day moving average, and like facing at this trend line over here, already starting to see some selling happening. So in the near term, I may be looking at in the next 1 to 2 weeks, right, that Singapore might start to trend down to test this trend line in the next few weeks. Okay. So what should we be looking at, as Singapore starts to trend down and give us some confirmation now whether this rally is confirmed? Is it going to be bullish, or are we going to face a second bear, in the near future? Okay. So some of the stocks that we can look at, during the next pullback. All right, this is ST Engineering. Okay, it has been forming a nice base pattern, and due to recent rally, it has already broke this so-called resistance over here. So at this moment, we will, as in with the broad market, right, we want to look at the retracement, the pullback. So as it starts to pull back, this is roughly the area that we should be looking at to buy, like 340 or something. Don't be in a hurry to queue, we just have to be mindful, see how deep it pull back. It may pull back all the way down, and the whole pattern is destroyed. So we shouldn't be investing anymore. But if it pulls back, shallow, and then when the market starts to turn up and it starts to turn right, then that's where we start to buy. Okay, so we just be mindful of this. ST Engineering, they have a lot of government contracts and giving you about dividend yield 4.2%. Okay, DBS, banks. I think this is what most people are very concerned. Is a nice rally after it break out from this consolidation. Okay, and right now it's testing its 200-day moving average. It's a strong uh, resistance. Okay, so we're already starting to see a lot of selling. You can see the volume here, a lot of selling happening. Today is a rest day, so it might take a few days, for the distribution to happen, and before it starts to turn down. So when it starts to turn down, that's somewhere we will want to look at to invest or buy back into this stock. Okay, this is DBS. So similarly for OCBC, we are seeing the same kind of pattern. All right, almost testing the 200-day. And this is UOB. And if I'm not wrong, UOB is about to have ex-dividend. Okay, so most likely in the next few days might have a gap down. Okay, so this is UOB. So similar fashion, DBS, OCBC, UOB. From my perspective, you can, I mean, three banks, they move in similar fashion. They move together, come down together also. So, I mean, you can just choose one out of three. Personally, I choose OCBC, and the reason why I choose that is because OCBC is being managed by trust, the Lee Foundation trust, meaning to say that having a risk management team in place to manage the whole company, they won't be too adventurous in taking risks in the market or getting out bad loans and stuff. Whereas DBS is different. DBS is mainly government linked. okay, and government backing, which means to say they will tend to take more risks, and you will see that the share price of DBS, right, tend to move faster and higher. So that's the reason why, because they take more risk to secure contracts, and also from government, like recently, you have SIA, Semcorp rights issue, so they all gave to DBS for business. So UOB is mainly a family-run business right now into the second generation. So I mean, so it depends. You like government back, trust, risk management, or family managed kind of bank. All right. So you just out of the three, you pick one. Okay. This is Hong Kong land, denominated in US dollar. So at this moment, it's been trading in a nice pattern, forming a base. All right, so it recently tested this high, and then retracing back. So we like to see this retracement, right, to be shallow. Hopefully trade above $4, as it start turn up, right. That's where we want to buy, like 405, 410 kind of price. Okay, so we just watch out for Hong Kong land, giving a dividend yield about 5%, trading price to book about what 80% discount to book value. So because they own Hong Kong properties and Hong Kong property prices are like sky high, finding 50% discount is quite usual. Okay, so this is something, yeah, it's undervalued if we compare to the market average, which is like 50% discount. So this is like much more lah. Yeah. So all these stocks that I've mentioned beforehand is mainly for the as investors. What should we be looking at to invest? So this is Capital Retail China Trust. All right, it's doing a nice base pattern. Testing this for $1.41. So waiting for this to break out, and possibly trade higher. The expected potential of this move probably will be about $1.58 to $1.60 kind of pricing. So this is something a short-term trade that we can do when it starts to break out above. This is OUE commercial, similarly doing a nice pattern, cut pattern here. So we like to see it can pull back further, or sideways, and as it breaks above, we can look to trade. Okay. So similarly, the potential for this is roughly about 50 cents. Okay. There are many other REITs that has already ran off, and therefore we shall wait for the pullback to enter. Like this is Escort. Okay, also similarly had a nice base beforehand. All right, and it moved off together with the banks. And on this gap, right, they were being added into the North Asia REIT index, by FTSE. Okay. Yeah. Some of the REITs that I mentioned before, Fraser Centrepoint Trust, already mentioned here, and it has already moved off. So I've last week video I've mentioned a lot of stocks already showing signs of weakness, selling are coming in. So you can see there's not much movement already. Testing its 200-day moving average, so it's coming down. All right, so in such case, we just wait for it to come down, form some nice pattern, and then we just look to find opportunity to buy in or to go in. So we are looking at this, then we shall look at Capital Mall Trust. All right, so in similar fashion, it's formed a nice base and it's moved off together with the market. And after this selling happened, it didn't matter and it continued to trend upwards. All right. So bear in mind that Capital Mall and Capital Commercial Trust both have a merger coming on. All right. Still waiting for EGM to happen to approve for the merger. Okay. So in such case, we just have to be mindful and hopefully you can see if you can retrace back to about 170 area to buy into this stock. Now recently we have big news. All right, this is Sembcorp Industry, and what happened from this gap, right, is that they are going to demerge from Sembcorp Marine, meaning that's a nice word to say, demerge, but in actual fact, they are actually dumping Sembcorp Marine away, in my opinion. Okay, so just let's have a look at. So what they are saying that in such a deal, right, is basically to save Sembcorp Industry and to cut loss on Sembcorp Marine. So Sembcorp Industry went up, gap up, and Sembcorp Marine gap down. Okay, so this gap down is like too severe, so people are being opportunistic to buy into this. All right. So what is happening with this deal? Okay, is that Sembcorp and Marine are proposing a 2.1 billion recapitalization. All right, and they are giving a so-called a rights issue at 20 cents per share. And in actual fact, they are only raising $600 million over here, 0.6 billion. Okay, sub underwritten by DBS and Temasek Holding. Okay, this 1.5 balance, right, is basically to strike off the debt they owe to Sembcorp Industry. Okay, so once this rights issue is done, basically Sembcorp Industry is going to take all their Sembcorp Marine shares and distribute as dividends to all their public shareholders. All right, so this basically tells you what is going to happen. This 1.5 billion credit facility they give to Sam Marine, they are going to use the right issue and strike off this debt from Sembcorp. Okay, so what the what I can read in between the lines is that Sam Marine is unable to repay this debt to Sembcorp. So they have to using this right issue to get whatever money they can to pay back this Sembcorp. Okay, so this is a post rights issue. What is going to happen? Temasek is already going to get 0% to 23%. Okay, depending on how many people subscribe to their rights. So you can see the shares, right, are mainly being flown over to public shareholders. All right. And thereafter they will distribute the dividend. And you can see Sembcorp, right, getting out of the picture. They are distributing all their Sam Marine um, or all their holdings in Sembcorp Marine, right, their shares, they will give as dividend to the public shareholders and Temasek Holding. So this is what happens, okay, after Sembcorp gave its dividend. So I've received a lot of message, a lot of calls, regarding what should they do. Um, I just come up with a spreadsheet based on today's last done price, 61 cents. Let's say if you have 5,000 shares of Sembcorp Marine, 5:1 rights issue, subscribe price is 20 cents. The theoretical X right price, if it goes X right, at the last done price of 61 cents, your Sembcorp Marine will be trading at 27 cents. Okay, and your rights, right, you'll be trading on the market at about 6 cents. And this is your right shares that you have. So there are a few options, 1, 2, 3, 4. Option 1, you just sell your mother share at 61 cents, you get back this value. All right. Option 2, you sell your rights and you sell your mother share. You're only getting like 2008, so it's like a loss. Option 1 is better. You can sell your mother share, subscribe to the share, and sell off at the market, at 27 cents. You're still back to square one. So the only thing for option 3 is that you're hoping the price will be higher than 27 cents. Okay. And the fourth option is probably a little bit complicated. You sell your majority rights, like 25,000 shares, right? You sell 24,000 of right shares. You keep 1,000 for the rights issue, and then you subscribe for excess rights. All right. So for the same amount, 24,000. So this is roughly the value you'll get back. Okay, so this is something that I thought of. What's the options available? Whereas for traders, you can look at option 4, probably buy 1,000 shares, and then subscribe for access rights. Hopefully, you can get more of the access shares, and then you sell at the market. So you're subscribing at 20 cents and you're selling at 27 cents. So you're making that difference in this. Okay, so why I'm basing this is because the whole market has been through a major rights issue by SIA, and all the liquidity has been like sucked up into SIA. Okay, why I say that, because SIA is looking to raise 15 billion, but they only managed to raise 10. All right, $10 billion, meaning to say they are short of 5 billion. Meaning to say the market can only support that much. All right, so I think now with this rights issue coming so close, we might probably be able to get some excess rights. Okay, so that's how I view it. Right now in the market, for us traders, there are some movement in the medical stocks. 2 weeks ago, I mentioned the healthcare sector is over already. There's some sell down happening, and then invested. So today, UG Healthcare make a move again, making a new all-time high. So to me personally, it's already a very high price. You can see that isn't a real retracement, a real rest. So trying to trade into these stocks, right, is a high risk to me. Similarly, we look at the other stocks. Riverstone seems to be better. It's trying to rest. It's just that the rest isn't long enough. Personally, I like to see, like, at least 1 or 2 more weeks, trading sideways before you can find opportunity to trade. Top Glove is mainly this one has really destroyed the pattern. Okay, so what we need to see here is that most likely it's going to oscillate sideways in a very big range. So I don't think this might run in the near future. MedTech have moved today, pretty nice. So it has been doing a quite a similar pattern here: run, rest down, run, rest, run, rest. So similarly in this, most likely it might be testing the high here, pulling back a little, and might start to move off again. So in this, right, we just have to be mindful the next few days. If we already run off, then don't chase. But if it can rest sideways, 27, 28 cents, 29 cents, we just have to watch out. It might start to move off. Like a short burst. Usually it's a 1 day, 2 day, 1 day, 2 day, that kind. This is Biolytics, subsidiary of ClearBridge, and this seems to have a better pattern than ClearBridge. Look at this. So this is a little bit weak, mainly because they had a lawsuit with from a JV partner in Indonesia. So I think getting into trading into Biolytics may be better. Okay. So you just have to be mindful of roughly this price, so 48 cents. See if you can break off, or the intermediate. This 44 half, 45 cents. It can start to move off, right? Or there's a lot of volume coming in. You can look to buy into this stock, trading for the short term. Okay, so just be mindful of this 48 cents area. There are a lot of volume here coming in. So the sellers that are trapped here, they might be selling when it starts to be at this price. Yuma mentioned quite a few times. All right, personally, I entered here 392. I already shift my stop loss here about 386. Right now it's forming quite a nice cup and handle pattern. So we'll like to see if in the next few days, or probably next week, you can break off this resistance here, 410, and probably make its next move upwards, probably to the region of about $4.30. Okay. Previously, I've mentioned I entered Jaffa like 66 half. So what happens is it make this thing, it try to break off and it fail. I just took get out of my position there, just like small little profit, $50 kind of stuff. So most likely here is going to retrace back, okay. And to me, I'll just look at how it turns out. If it starts to form a nicer pattern, I might get in again, okay. And together with Wilma. This is Sri Trang Agro. Last week already did this selling. Okay, this is a very euphoric move. So similarly, like Top Glove and Riverstone, after a euphoric move, right, most likely it's going to rest sideways. In such a case, I think this is still quite too soon for it to start moving. So most likely you will rest longer, and I'll just let it rest longer. All right. So at this moment, in summary, I've mentioned in the beginning that personally, I'm still mindful that a second wave of a down move might still be possible to happen, mainly because the whole fundamentals of the economy is not supporting it. Because firstly, we have government stimulus measures that is supporting it. We have all the various funds, not just in Singapore but in the whole world, and we are also facing between 4 to 8% of a contraction for the year in our economy. So this is quite a very serious matter. We have thousands of unemployed. We have businesses that are closing down. We have chain companies, pulling out from Singapore. So this is a really bad situation that we are having for the first time. So in the real picture, the real thing will start to sink in probably end of the year. In is also in conjunction with my previous analysis of the gold chart. Okay, that I mentioned that looking at the long-term charts of gold, most likely gold will start to trend upwards or break off this 1008 resistance, right? Probably like end of the year. So if all this coincides, right, that means to say we might be looking at a second down wave, right, probably towards the end of the year, which is also the U.S. presidential election. So something might happen during that time. All right, so I'm not too sure, but we just have to be mindful of what is happening in our economy, what are the news that are coming out. If it's positive, if it's good, market continue to rally, then that's good news. We don't have a second down wave. But at this moment, the signs are still not there yet. All right, so essentially most of the stocks that I've mentioned in the past few videos, most of the stocks has already moved off. Some made an extended run or run for 2 weeks, which means to say right now we have to be patiently wait for a pullback for them to come down slightly, and then we look for opportunity to go in again. So I've reached to the end of it. Do you guys have any questions? You can unmute your mic and then ask your questions over here. All right, if not, thank you guys.